All right, the S&P 500 and the Nasdaq 100, and things got interesting on the week. Changed a few of the levels so you can see them as well. The red is more important. The gold is what I'm watching kind of on daily time frames and quicker levels. But as you can see, we started breaking down pretty dramatically. We knew once we broke below those lows kind of established week before last, right, the 28th, that things were going to get nasty. And so we see that level break and ultimately start dropping down. But let's zoom out really quick to really understand where these levels derive from and kind of how they're important. So we knew a few levels on the board, right? First of all, 19.7. Once we really held below that, it was bad news. We saw Monday morning, we rejected, and then we kind of just kept on coming down. Then we broke below that kind of level. We're finding some support around 19.4, 19.3, and the next level was important. It was easy to see, was around 19K flat, 18.97. And then from there, we had a level down here, 18.3. So a few things to attack here. Once we broke below this 19K level, we knew we were going to be in trouble, and we talked a lot about this in the previous videos, coming down to the 200 SMA. And you could almost see like instantly when this level started breaking. So you get below the 19K, we kind of whipsaw back and forth. We mentioned the previous low here as well, the 19.15, right? It's really simple what you're seeing here. When we break, we always expect to see BRBs, break, retest, break, right? Just retesting and then eventually break back down. Very easy to understand the chart that's happening. Now, this is where things get more important, is when you start flipping this level here at 18.97, right? You can see we break down, we break below that local low, bounce back up, and then boom, push almost straight into that 200 SMA. Now, if you aren't a fan of the Nasdaq and you want to see more detail, you go to something like SPY, and SPY gives you more answers as well. You know, SPY was really clear here. We talked a lot about the range in which we were trading. This was all on Twitter as well. So we're sitting in that range for a few days. We break below, and then we start making lower highs there. And again, I post a lot of stuff on Twitter, so you guys can always stay up to date. And just in case you guys aren't in Discord or aren't everywhere like that, right? I want to keep you guys posted as much as possible. So I had a thread going here. It said, get under 550, it's going to get yucky. Sellers are going to take control, as we've mentioned. Obviously, you make lower highs. You eventually break that zone, 550, and then boom, you shoot back to the downside. And we're targeting 544, and you saw sellers pushed us even well below that to 540. So you really ended the week terrible. In normal cases, what we've kind of seen previously is we start to make some local bottoms, and then we'll find some support near those levels, right? We'll get a little bit of a bounce. Now, getting a bounce doesn't mean you're strong. It just means that you're kind of getting a retracement. You didn't get that. You just made lower lows all day long. That's really bad news. Now, going back into Qs, you can see here as well, we came right down to our next level, 449. So the next question here is, what are our next levels going into this week? We hit the 200 SMA on the Nasdaq already. You're actually below it. So I'm targeting the 200 SMA here just flat out on Qs. That's where we bounced last time back early August when we had the whole Japanese stock market and what was happening there. Okay, so that's what I'm targeting on the Qs. SPY, you're well off from that level. So in my opinion, you're going to start finding some support near around 533. I would suspect this little range right here. Let me bring this up a little bit. About right here is where I'm targeting. Around 535 to 532, give or take, is where we're going to start finding support. So it's about $7 a downside there on SPY. Ideally, what you would want to see to start this week is that break you're already getting, the retest of 544, and then pushing back down. And if you want more confirmation that 544 level is important, you can actually see what happened here. You broke immediately, retested immediately, and shot back down. So that's what you would like to see ideally to get some short setups, is getting that retest of that level to push us back down into that 535 minimum level down there as well. So kind of what I'm watching there. Qs look really weak as well. Qs, more direct approach. You are below level here, but you're already flatlined there. Reminds me a lot of what happened back here at 460. So you're flatline there. You're looking for a 441 test, about $7, $8 downside there as well. So as you may have guessed it, today in this week, we're mostly looking for some more downside. But quickly, IWM also selling off aggressively back below 210, very weak there. DIA Dow also seeing a lot of selling. So it's important to understand a few things here to go into Dow futures, is that you're seeing some downside on Dow as well. Dow is holding up locally the best. Let's make that clear. But the potential double top here is kind of disgusting at all-time highs, okay? But when does a double top get confirmed? When you break that neckline or that median low, which is way down here at 38.5. If you break 38.5, we have a long way to go. I'll keep you guys posted. But if you break that level, you're going down to the 200 SMA on the weekly. It'd be one of the easier trades out there. So very important there. Now, a step further. What is the biggest, in my opinion, catalyst or mover, driving force of Nasdaq? And I think Nasdaq is your main focus here on the week. It's semiconductors. So really quickly, I'm going to get rid of all of our drawings here on semiconductors. And this video is a lot of technicals. I'm sorry, guys. I'll have a little bit more to cover, but semiconductors here. Let's talk about this chart. This is the daily chart on semis. You can see you have held the 200 SMA. You've been above it since January 17th, 2023. You've retested it, and it's been great buying opportunities. You haven't held below it on a daily chart, though. It's very important. None of these are holds below. And you might see this candle here and be like, oh, this is a hold below. Now you gap down, and you got right back above it. Buyer step back in. So going into this week, it's a very important week. Because number one, you held below this on the daily. You did hold below that level. That's very important to understand. But when we zoom out, you need to understand, again, as bullish as I am on semis, and I love NVIDIA data, and that's what I keep saying. If you're going buying NVIDIA, you buy time. 2026 is what you want to buy, right? The last time you broke and held below on a daily time frame, you was right here back in January 2022. Now you got some chop back up, but you eventually ended up dropping back to the 200 weekly. Before that, the last hold was back here, March 10th, 2020. You went down to the 200 weekly. Before that, it was October in 2018. You held below, you went down to the 200 weekly. Now, I don't want to be the person that says you're going down to the 200 weekly because that's literally like 70 points, 80 points off. That'd be insane. You would see pretty dramatic selling across the board. So I don't want to jump there yet. But I will say, if you hold below, I would be shocked, absolutely shocked, if you don't get a push down your 200 to 201 on SMH. And again, if you want to see the, like, you know, how this correlates directly to the Nasdaq. I mean, it takes 5 seconds to just throw the chart up above, you know, correlated to it. You can see when SMH started breaking down, the Nasdaq started breaking out, which was kind of right with AVGO's earnings as well, which didn't really help out semiconductors. So things to think about, things to be watching. That's all I can really say there. Semiconductors are one of my biggest driving forces of the market. And again, this hold below was pretty gross. You get back above 218, we can talk. You look good. I might even consider starting buying and getting more aggressive. But again, I've said this with repetition. You don't have to be the first one in the market, guys. You know, I want to make something really clear with SPY specifically, because I was very clear about this on Twitter, and you can go track everything that I've said. So no matter what you think of thumbnails, no matter what you think of things that I post on YouTube, I keep, and I don't delete anything off of Twitter. You can check that as well. But the whole time we were in this range on SPY, there was no reason to start hammering short. There really was not. Now you could try to top tick, but again, you know, that's a dangerous game if you're trying to top tick and, you know, ride this momentum. But all in all, you were just chopping for the better part of 3 weeks, from August 20th till basically September 3rd, right? Nothing going on. Okay. You break below 555, you break down, you retest, and you have every opportunity to go short. Lower lows, lower highs getting established, every short signal you could have wanted. But you just had to be patient. Now in here, there was no clear decision. Right here, it was easy. It was so simple. You started breaking down immediately. We knew there was no liquidity below 550. Everything was right there for the taking. So I just want to make this really clear, is that when you're stepping into the market, understand that everything that you're looking at, everything that you're charting, everything that you're writing down, you know, make it have purpose. Make it really like known to yourself, and make it clear of what you're actually looking for. Like, understand the difference too of, there's a quick intraday trade, which, yeah, there's some quick, you know, scalp setups, but you're going to make a bulk of your money, right? You're going to make a bulk of all your money getting the big moves, really being patient. I want to make that super, super clear. If you don't follow me on Twitter, but I got to give a shout out to this guy, because again, he's been in Discord for a while now. I know there's other people in here making money, so I don't want to like discredit anyone else. I'm not at all. But this is a testament though to the slow grind and paying attention to what you're doing in the market. It's not to say, oh, Discord made this guy all of his money. But again, Jay West has finally reached that goal of 100K. And this is like the coolest part of like, you know, what I'm able to do and like some of the stuff that I'm able to put out. Like, if I can just give you somewhat of an edge, right? And if you're just patient and you really start to apply the things that you're doing, and this is the result. Like, this is clear as day. We've seen other people do this, but like, this is just the most recent example. So again, I applaud you. But again, the thing comes back here is everything you're doing has purpose. And so when you're charting, when you're looking at the markets, right? Yeah, you can have a bias. And my bias here is still the upside. Even with the downside happening here, I'm still bullish, a bullish bias in the longer term going into the end of the year. I still am, right? But I'm not taking crazy actions. I'm still applying my rules and watching my key levels and watching the chart. So you have to be able to discern that as well. Okay, step further, VIX. VIX continues to rise. You're holding up. Above $20, VIX is usually pretty indicative of sellers have a lot of momentum and control. But just know, VIX pops up, VIX comes down, just like we saw back in August. So I got to make that really clear. So people start getting and falling in love with these sides of the trades. But again, as you get closer to those 200 SMAs, you got to be patient. You got to be less aggressive. You got to put your foot on the brake a little bit. So understand that as well. I'm not saying, again, I still favor the downside on this week, but again, important to understand. Now, a little bit further going into this week, let's be really, really clear. I do want to say this specifically, okay? You have CPI data coming out on Wednesday. You have core PPI, core CPI as well on Wednesday, but core PPI on Thursday. So your biggest inflation data coming out there as well. Now, the other side of this is now you're seeing Fed members, oh, we're ready to cut rates. Well, I bet you are. The question, though, now, and the most dangerous part of this is now the market is pricing in, it's about a 50-50 coin flip of a 50 BPS cut and a 25 BPS cut. I doubt they front load rate cuts with the 50 BPS cut. That would be wild, in my opinion. We'll see, but I think it would be wild. I still think this is going to positively affect what I was been talking about with mortgage rates. Mortgage rates continue to decline rapidly. You're at 6.27% as of Friday. Very important to understand this. As mortgage rates drop, I do believe it stimulates the market. Now, maybe it's like with oil and gas, right? When gas prices drop or oil prices drop on the chart, it doesn't hit gas prices for maybe a month. Again, the same thing here with mortgage data, right? I don't think you're going to see an influx of homes sold within 2 weeks. Not going to be likely. But I'm going to tell you right now, as you start to free fall here on rates and you start getting closer and closer to 5%, especially with rate cuts, well, guess what, ladies and gentlemen? You're going to see the market start to respect and like this data as well. Okay, I'm just telling you right now. So there are perks to the market and why I'm net bullish long term. But again, short term, still expecting that type of downside. Understand that. I recommend following on Twitter, guys, so you can get all the information as well. So make sure you're following on there. Also, too, guys, if you want to use our broker who we use every single day, the link is down below. I'm not going to go over too much options here today, but Moomoo, the link is down there. Again, they just have their cash accounts, unlimited day trades. You can see all the information there. And they have a lot of promotions, so make sure you check them out. Now, stocks on the week that I'm watching. Now, you saw semiconductors. Obviously, it doesn't look good there. I'm still favoring semiconductors across the board. Now, on the week, I would say 70% of my trades and Jay's trades consisted of shorting semiconductors. Now, why? And I want to use this as an example, right? Why were we focused on SMCI? Why were we focused on SMCI again, AMD, NVIDIA, right? Why? Because that's where all the weakness was. That was the primary driving force and weakness of the Nasdaq specifically. Now, I think NVIDIA is an interesting situation, right? Got to get below like 101, the 97, but I think there's a high possibility you push down to your 200 SMA. On the daily, you're not far off. It's around $90. It wouldn't be too much lower than where our low was back in August. High possibility, especially with some of these earnings not being so hot. The next one is going to be AMD. AMD, I'm kind of getting to the point where I'm scared to trade this because I've traded it so much over the past week and a half that am I doubling up? I don't know if you guys ever feel that way, like you're trading something too much. You don't want to milk it dry. Pause. So that's the thing that we're watching right now. But I'm looking for the break below 133, a break, retest, continuation. You're far off from the 200 weekly, but I wouldn't put it out of reach of 110. We've seen look at the volatility here on AMD. It's actually been fantastic. You drop from basically 160 down to 134 in a matter of 7 days. Pretty awesome, not gonna lie. Great movement, what I've been tracking, what I've been watching, and it's been primarily one of our weaker names here. Why? Because you're below your 200 SMA. So I'd rather trade something below your 200 SMA than something above it, for instance, right? And another important thing here is AVGO. A lot of you guys are gonna be asking about this. I think AVGO is a very simple chart. I wouldn't be overcomplicating this. I'm gonna be totally honest for everyone here. You want to watch a few things specifically. And it's funny that you came right into that level previously. You're getting into your 200 SMA and your 134. Okay, you bounced near your 200 before, so you're getting into that level. I'd be very patient until you break and hold below 134. Below 134, I have you pushing down to 130, maybe 128.8. Whatever you watching there. My favorite stock, favorite name across the entire board. I've been screaming it to Discord. I've been telling them, when it comes to swings, this is the only name that I like swinging, right? Swing for the fences. Call me Jose Bautista. Again, SMCI, I believe that's a fraudulent company. They respond to their fraudulent, their fraudulent people calling them a fraudulent company to not responding to anything and moving earnings back and not filing any paperwork. Cool. I'm targeting 360 down here. We've been short for a while. Below 4.8 was a real awesome short, even 419. You already hit T1, just slowly breaking down, but you get the break, the retest, bear flag, looks pretty terrible. Only thing that saves SMCI is if semis like come roaring back. I just don't see that happening in the short term. Understand that. Next one up here is Microsoft. Been talking a lot about this as well. Called this one on Discord as well. Below 404, broke. Didn't get the full retest, but pushing down to 400. Below 400, things could get nasty. I could see us pushing down 1 into 397.2, give or take, right about there. And then maybe even lower back down to 390. Losing a lot of steam. I like Microsoft, but again, kind of just sucks here. I would steer clear from shorting Apple personally. Below 220, I do think you could come down to 215. It's a major level. I think it's highly likely you test it. But they have like their Apple stuff coming up, their new iPhone, and I think they're going to kill it as far as their new iPhone and products. So again, steering clear, not trying to take on crazy risk. Last thing I'll discuss here is Bitcoin. Everyone keeps asking about Bitcoin. Do I like it? I'm going to make something really simple for you, everyone here. Okay, Bitcoin, very easy chart. This looks pretty terrible, first of all, but you're making lower highs since March 12th, so you're probably not breaking out anytime soon until you break that line. Spoiler alert. On top of that, too, you're at this like last line of defense near 53.5K. You break this, you are falling quick, right? Your 200 weeklies near 400K. I mean, that 40K, that's what I'd be looking for. Maybe even 45K short term, but not getting crazy here. Bitcoin doesn't look good. Nothing looks great across the board. When I start seeing buyers step back in, obviously you guys know, I'll start buying back into the market, getting more aggressive. But right now is not the time to get aggressive, in my opinion. If you have comments, comment down below. See you guys next time, or probably tomorrow. Have a good one, traders.